traders, I am Agbo Samuel Odi, the Liquidity King and the AUD USD Sniper Trader, back on your screen. And in this video, I'll be talking about how to master the chart. Now, this is some of the beginners topic I learned while starting my trading journey, and I believe it will help you. So, if you're getting started in trading and you're trying to structure your education on how price really move, then this video is for you. So the first on my list is we'll be talking about how to read candlesticks, right? So we'll be talking about reading candlesticks. Now, what candlesticks are, they are more like a chart price that we use to analyze the data, right? Market data, right? There are a lot of price charts, but I use candlestick. They are line charts and they are bar charts. But for this, we'll be using candlestick, right? Because reading the anatomy of the candles is more easier compared to line chart and that of bar charts, right? So now, what candlestick help us do is to understand each candle and what market participants are doing through these candles. So now for the candlesticks, we have the bullish candlestick and we also have the bearish candlestick. Now the bullish candlesticks opens above and closes below, or rather the bearish candlesticks open above and closes below, while the bullish candlesticks open below and closes above, right? So now the open price we have for a bullish candle, the open price which open below, and wherever it trades to, and if it trades and close here, that means for that candle this is the closing price, right? And this is the open price. Now with this, we can also understand what the market participants are doing. So now this is how a candlestick look like. So for a bullish candlestick, it looks like this. So it opens and trade up and closes, right? So this is called a candlestick bar, right? So if a candle, this is the open price, right? And it traded here and closed here, right? And for a bearish candle, this is for a bullish candle, right? Bullish candle. And for a bearish candle, it opens, this is the open price, right? And it closes below. So this is the open price and it closes below, right? So understanding the anatomy of each candle tells you at every price point who is particularly in control of the market. So for example, with this now, we also have the high. So for example, if a candle opens for the bullish market, right? For the bullish candle, if it's open here and traded up this point, now this is called the high of that candle. And if it opens here and traded below the open price, this is considered to be the low of this candlestick. Now with all said, now you now understand how to identify highs, lows, open and close of bullish candle, and the same is applicable to the bearish scenario, right? So this is the open price and this is the close price. So wherever at what point price traded to, and the wicks are considered to be the highs and the low of different candlestick, right? With that said, so now once you understand the anatomy of candles, then you want to understand how it applies to market structure, right? So now for market structure, we have like three major market structure, which is the uptrending market, and we have as well as the downtrending market, and also we have the sideways market, which is a static market where prices are bouncing off different levels. So this is considered to be an uptrending market, which is predominantly controlled by buyers, and we have the ranging market, which is just consolidating, and we have the downtrending market. Now what a downtrending market means the logic behind market structure is we look at this data on the price chart to speculate price movement. Now, how do we speculate price movement? It's all about understanding how to read price chart, right? And in the price chart, there are three major market structure, which is uptrend, downtrend, and sideways market. Now, the uptrend is predominantly controlled by buyers, the downtrend is predominantly controlled by sellers, and the sideways market is just a consolidation market, which can be relatively called equilibrium, right? So understanding this market, when you see market trading up, you just know that you want to be looking for buys, and when you see a market trading down, you want to look for sales. And when you see a consolidation market, you just know either you stay out of the market or you trade within the resistance that has multiple touch and the support that has multiple touches. And we're going to be talking about support and resistance, right? We're going to be talking about support and resistance. Now, what a support means is more or less of a floor. So for example, assume we're in a downtrend and price got to this point and you suddenly start seeing the market changing direction, right? So this is considered to be a floor, which is a support level. So whenever price comes back to that level, there's a likelihood that those buyers that got involved here will likely push price up. And let's talk about the same thing for resistance, right? So this is simply what support is all about. So always remember, support is a price floor that market gets to and change to the opposite direction, and likewise the same for resistance. So let's say we've been trading up, right? Market has been trading up, and at a particular point you start seeing market changing direction. So this point here is considered to be a resistance point, which is more or less like a ceiling. So you don't break above the ceiling, right? So we expect that when price come back to that point again, those guys that push price down will likely do the same thing. And this is simply what support and resistance is all about. So identifying them on the chart will help you to make more informed decision on where to buy and sell. And lastly, we'll be talking about trend lines. So now trend lines are like horizontal support and